be live, and I'll play our theme song here for a little bit.
As the clock strikes 7, the vibes are alive. Inner circles here, where voices thrive. Turn on your screens, let the magic unfold. Listening and healing as stories are told. Come on, come on, this is your time. No topics too tough, just heed the calls. From mental health woes to justice we seek. Together we rise for the strong and the meek. A safe space for all, let's lift every voice. In a circle podcast where hearts unite. Sharing our truths, bringing hope to the light. Community strong, we're never alone. Together as one, we've created a home. With laughter and love, we break down the walls. No topics too tough, just heed the calls. From mental health woes to justice we seek. Together we rise for the strong and the meek. A safe space for all, let's lift every voice. So join the conversation, let's set the tone.
Good evening, everyone, and welcome to another episode of the Inner Circle Podcast. I'm your host, Abe Kamara, and today is Wednesday, January 28th. It seems like it has already been a year, but tonight is our business segment, and the topic we have is rebuilding credit that actually works. And we have Jeremy Desek in the building from CreditLife. He's going to be educating us tonight. So if you have a question, you can put in the chat or call our number 952-594-5154. Again, my co-host, Ms. B, is not here tonight, so it's just Jeremy and I. And then he's going to provide information about credit and then also about his company, CreditLife, and how to help folks, in our community. So, Jeremy, welcome to the show.
Hey, thank you for having me. I appreciate it.
Okay. Well, folks, again, this is the Inner Circle Podcast. Follow us on Facebook. Subscribe to our YouTube channel on X, Apple Podcasts, Spotify, wherever you get your podcasts. Thank you so much for supporting this community, for supporting us. Jeremy, before we get into things, just tell us a little bit about you, how long you've been in this business, and what do you like about this business?
Of course. So I've been in the credit repair space for about 16 years now, doing specifically credit repair. And my background in banking, though, is a little bit more extensive. I've been in credit and banking for 28 years. I'm the former CEO of a mortgage corporation that I sold back in November of 04 because I didn't like where I saw the market headed. I then did advising to mortgage companies on how they could kind of weather the storm. And then I went into foreclosure mitigation. I actually helped fight the banks on behalf of consumers so they could keep their homes. Not a lot of money in it, but I had sold a mortgage company, so did okay. And once that was over with, once the mortgage modifications happened, and once the whole kind of meltdown, the storm settled, I took a look. I said, well, what am I going to do with my life now? And I saw that there was a real need for people to rebuild, to get back from the hardships they faced. And I realized it was more than just the mortgage foreclosures. People had health issues. People had just young and dumb mistakes that we make when we're young. People coming from divorces or just unforeseen things. Sure. And ever since then, I've been doing it. Absolutely love it.
Okay. So tell us more about CreditLife. What does your company do? How does it help the average person?
Oh, for sure. So CreditLife, we are a financial wellness company, first and foremost. So while anyone, you hear about credit repair and just about everyone and their brother, oh, I know how to do credit repair. Oh, credit repair, dispute letters or go online and do disputes. It's more than just letters. It's more than just disputing because that's only a piece of the puzzle. So we really use three methodologies. We work to, do the disputes and such to eliminate the negatives from the report. That's the exciting part. That's what people get excited about. Something's there, then it's gone. They get it's visual. They get very excited. But the next methodology is the build. What do you do? What do you do if something doesn't get deleted? You still got to go. You still got to get towards your goals. You still got to grow and do your thing. And what do you do if everything's deleted? There's nothing left. Well, you have to have something on there. So myself, I'm actually a FICO certified credit coach. It's one of the things behind me says, one of the things on all my shiny blinky stuff. So I'm actually certified in the math, the algorithm that creates your FICO score, your lending score. So if I say, hey, I need you to open this account or close this account or pay it down or pay that off or do it at a different time each month, it's not because I heard a guru on TikTok say it and it sounded good, or someone said, oh, I did this, it worked for me, or something like that. It's because there's a predictable mathematical result. So sometimes people say, hey, you think it'll work? It doesn't matter what I think. It's math. It works. So what's interesting about our company, CreditLife, while most credit service organizations don't have a FICO certified coach, and while it's kind of rare for them to have one, we've got 7 on staff. And yeah, we've been around a decade. We're national, but we're based in Burnsville, Minnesota. So we're a local Minnesota company. We're Minnesotans, and we all just came together because we knew each other in the industry and we understood each other's values. So that one methodology, eliminate negative. The next methodology is build the positive. The third methodology is this. Credit doesn't operate in a vacuum out in space all by itself. Income is involved. Debt's involved. Spending, savings, budgeting, debt reduction strategies, and if you've got collections or things, debt settlement strategies, debt settlement techniques, how to settle a debt, when to best settle a debt so you have the max impact.
Sure.
So, yeah.
So I know, the common question someone might have, or I might have, does credit repair actually work? Does it work for, let's say someone coming to you, to CreditLife and to Jeremy for help. They have maybe 400 or 500 credit.
Right.
Where can you get them?
I'll tell you, it's one of my favorite questions is, does credit repair work? I always say no. Not in the traditional way a lot of people think. Again, it's not just send off letters or, God help, someone advertising a sweep, which involves fraud. But it's all those things I put together. So most people who come to me average about 506 last I looked. 506 for a middle credit score last I looked. 90% of the people I work with have a goal of home ownership. That means qualifying for a mortgage. Now, having been the CEO of a mortgage company, I do know when it comes to mortgage, just because you can, it doesn't mean you should all the time. So just because you can get into a house at a 580 score, it doesn't mean you should. It doesn't mean you should just barely qualify, right? Just barely get there, because rates are higher, mortgage insurance is higher, and the amount of money that you're spending each month is higher. So most people I work with, like I said, 90% of their goal is home ownership. I try to get people to a bare minimum of a 680. And, that's not, again, I don't think that's the finish line by any means. Credit scores go to 850, right? But at least if you get to 680, you'll have options of FHA or USDA or Fannie Mae or Freddie Mac. You have conventional lending, or you can take FHA. You can do first-time buyers or those types of programs. It is where all the doors start to open to you at that 680. So with most people, now, keep in mind, I'm going to put a little asterisk next to this. Most people are in our program about 9 to 10 months. So it's good to meet you to the biggest purchase you're ever going to make in your life in about 9 to 10 months. And I know that's fast. That is. Now, there are people out there who promise, guaranteed results in 30 days and things like that. Nobody can guarantee deletions. No one can guarantee it. I mean, aside from the fact it's against the federal law to delete it, there's a law called CROA, the Credit Repair Organizations Act. You can't delete it because who can predict if someone can verify something? I can't.
Okay.
You know, it's like asking your lawyer, can you guarantee I won't be found guilty of murder? Your lawyer is going to look at you and go, no, I'm not guaranteeing anything. But there's best practices. And that's also why we approach it from all those areas. Because what if everything doesn't get deleted? You still want to get to your goal, right? So we want to overcome anything that's negative, any credit artifacts, any remaining boat anchors, right? We want to overcome that with a lot of good stuff. I say it's like biting into a habanero chili pepper. If you bite into a habanero chili pepper, it'll blow your face off, right? But if you put one into a pot and you put in beans and you put in meats or you put in lots of good tasty ingredients, when you dilute it with enough positives, suddenly the habanero becomes tolerable. Negative credits like that. If you can dilute it with enough positive, the mortgage underwriter will look at it and go, I don't like this, but this kind of makes up for it. So we can get the average person or even the below average person, we can get you to your goals. It's not an if, it's a when. You know?
Why do you think so many Americans struggle with credit? Or why do you think, so many Americans have bad credit, in the first place?
Well, there's a couple of different reasons. Number one, when it comes to credit, if it feels like the deck is stacked against you, it's because the deck is actually stacked against you in favor of the banks. Okay, that's number one. Number two, in America, we have a spending problem. We have a me problem. We have an I want problem. I want this. I want that. I'm entitled to this. I'm entitled to that. We do. We're the only country where poor people have a flat screen television. And that's a great thing, right? But the reason people have credit problems is, number one, the deck is stacked against us. Number two, we cause a lot of our own problems. We do. I'm an accountability guy. I know the problems I cause, and if you ask my wife, she'll be happy to tell you the problems I cause. But I know I cause some of my own problems in my life. But so we have deck stacked against us. We have our own problems, and then we have the third thing: education. They don't teach you this stuff in school, man. They don't. I wish, by the way, I've said that for years. Oh, this is the class we didn't have in high school, right? First of all, in high school, I would have probably not paid attention. I would have been staring at girls anyway, but that was me, but Hastings High School, little over a month ago, right before the big holidays, I was asked to come out to the high school and to teach credit to seniors. And I spent the day teaching basically all of the senior class credit and proper credit, and basically how not to screw it up like I did when I went off to college. Got a credit card and maxed it up, didn't have a job, didn't have any way to pay it back. Maxed it up, destroyed my, out of the gate. I destroyed my credit out of the gate. So on the education side, it's hard stuff to figure out. That it all kind of blends in with the deck stacked against you. There's so much misinformation on the education side and so much bad information when you're trying to educate yourself that oftentimes you don't know where to turn. I've got if you don't mind me doing a quick plug, I've got a group on Facebook called the Free Credit Repair Advice Group. It's been around for 9 years. I've got 65,000 people in it. And I started this group to show 11 people a video. Literally, I started it because I wanted to show 11 people a video. So I taught community ed. You know those catalogs you get every quarter that has all the community ed classes? So I taught at Lucy Lane in North Minneapolis. I did a Saturday class, a 5-hour class on Saturday mornings. It was just a one and done, so I did them every quarter. It was called Financial Foundations and Credit. I didn't charge for it. is about things like ending the generational curse, if people know what that is, and building generational wealth, and basically how to get how to stop paying your landlord's mortgage, how to not screw up like I did when I went to college.
Sure.
Basic financial literacy. And I hate the term financial literacy because the opposite of literacy is a negative connotation. You're not illiterate if you haven't been exposed to something. You're not illiterate if the deck's stacked against you. You're not illiterate if mom and dad didn't understand credit, then they couldn't teach you credit, right? I mean, if that's the case, that's not illiterate. So it's financial growth, financial education. It's a financial foundation. I called the class Financial Foundations in Credit.
Okay. But let me just stop you a little bit, right? You talk about how, the deck gets stacked up against us, how that's not, we have a spending problem here in America. Like, I want to push that a little bit. I mean, because when you look at the economy, right, the economy is it's dependent on the American consumer. It's a spend. It's like, so don't you think because we are bombarded with, advertisement, or this is good for you, this is good for you. It's not so much. It's like we have a problem, but we are being bombarded. Oh, you need this, this, and now, things like that.
It's a spiral. It's a spiral. We have a problem, and then we make a problem, and then that problem gives us a bigger problem, and then we're buying it. So then that gives them the money and the incentive to do it and make a bigger problem. You need the newest car, you need the newest iPhone, you need the newest shoes, you need the newest coffee drink with pumpkin spice in it. Man, people paying like $9 for coffee. You can buy a bag of coffee for that and make 900 cups of the dang stuff, But everyone wants their froofy, lucky, convenience, happy. And then you see the teenagers, they're seeing the influencers. Yeah. And ladies and gentlemen, influencers are paid to tell you that this coffee is good. They're paid to make you think that you're fat if you don't wear these clothes, or God knows what, right? And so, yes, we have a spending problem, but it is pushed on us. There's no question. There's no question. And when we go back down to the foundations, if you don't have the foundation building the whole time with good information and things like that, you're going to fall in the trap. It's a trap. You are. And yeah, go ahead.
Yeah. The other thing, though, right? I mean, you talk about financial literacy, but I think, don't you think there's two things, going on at once, right? The financial literacy, which is financial education, and also just maybe another education just about credit, because this whole economy, the American economy or capitalism is based on credit. It's based on credit. Don't you think, you actually need these two things, right?
You really do. I went to college at Winona State University. I ended up following a girl up to Minneapolis. Again, like I said, I wouldn't have paid attention in high school. I went to school, and I had an econ class. And I learned a lot. I learned how to balance a checkbook. I learned about saving. I learned about budgeting, like things like basics, like don't spend more than you make. Good piece of advice. But credit, you get thrown into this grinder, and I'm a smart guy, or maybe I'm just an average smart guy, but I got thrown into that grinder and couldn't make heads or tails of it. Initially, I learned out of necessity. I did. I really learned financial and credit out of necessity. The thing is, now we're in this information age where information's more accessible, but the problem is so much of it's misinformation. That misinformation is more accessible. And the thing is, the worst misinformation sounds like the greatest thing. Like, oh, your credit could be clean in 7 days. That sounds great. I want to listen to that guy. Well, that guy's full of it. Meanwhile, the one going, no, it takes time and building it. I don't want to do all that. I'm an instant gratification culture person. That's been pushed on me by the media. Yeah. It's been pushed on me by, people don't talk. Remember, when's the last time people wondered? Like, you'd sit around with your friends and you'd wonder, maybe you'd make a bet about the answer to something. And then one kid would go to the library and look it up, and then someone win the bet. No one wonders. They got the cell phone. They just, here, let me check. Oh, there it is. And so we treat everything like that now.
Yeah.
Wonder makes learning.
Yeah.
It fuels learning. And the second we lose wonder, we're in trouble.
Yeah. Well, folks, tonight we are talking about rebuilding credit that actually works. We have Jeremy Dissek in the building with us. He's from CreditLife. He has his company. He's been helping people for the last 16 years. So you can join the conversation tonight by putting a comment in the chat if you have a credit question, or call our number 952-594-5154. But Jeremy, no, here's my next question. Right? In your experience, what's the biggest misconception people have about credit or credit score?
Boy, there's a couple of them.
Okay.
Number one of the biggest misconceptions is the score you're seeing online for yourself is your lending score. Okay. I'm going to tell you, let's take Credit Karma, for example.
Yeah,
the free app.
Yeah, everyone has that. Well, we all have that. Okay. Yeah.
The good thing about Credit Karma is at least you're somewhat paying attention. That ends everything that's good about it. So Credit Karma shows you part of 2 bureaus. It doesn't show you all 3 bureaus. So, ready for a deep dive?
Yeah.
You ready? All right. You're gonna get like the real credit education here. Okay, so there's 3 credit bureaus. Okay, Equifax, Experian, and TransUnion. Those are the 3 credit bureaus, and these are private companies. It's like Nike, Reeboks, and Adidas, right?
Yeah.
They're private companies. They're mercenaries. They're not missionaries. And you can buy Equifax or Experian credit monitoring, and you can pay Experian. And guess what? You're still not their customer. You are their product. Your data. That's the product, and they buy and sell in it. Their customer is, was, and always will be the bank. You have to remember that. So there's 3 bureaus, Equifax, Experian, and TransUnion. The way it works is when a bank is keeping credit information on you, they report it. They have to pay to report it to the credit bureaus. They have to pay to give that information to Equifax, Experian, TransUnion. Now, you can go in that same bank and apply for something. They're going to pull a credit report. And to do that, they pay Equifax, Experian, and TransUnion for the same information in some cases that they just paid to give them.
Yeah.
Excellent business model. Wish I thought of it. So you've got these 3 bureaus. They keep the information on you, on me, on everybody listening to this. They keep the information on 350 million people.
Wow.
Now, on average, for each of us, you, me, the audience, they get the data from 20 places on average per person per month. So that's 20 times 3 times 350 million pieces of data. We're into the multi-billions, right? If they wanted to, if they were forced to verify even 1% of it, they'd need over 1 million employees. It can't be done. It's not reasonable. They can't do it.
Okay.
So do you know how much data the credit bureaus verify every month? How much of the information that's being, now mind you, credit's used for everything these days, right? But guess how much data they verify every month?
You tell me. I mean, maybe like 10% of it or 5%?
Zero. Nothing. Wow. Not a lick of it. None of the data is verified. They simply publish whatever they're paid to publish. Now, that wouldn't be a problem if credit wasn't used for anything, but credit's used for everything now. And not just big stuff, not just like I want to buy a car, right? They're using it for background checks for jobs. They're using it for apartments. They're using it for security clearance. They're using it for insurance rates. You could have the same wheels, the same zip code, the same driving history, the same car as the dude next to you. But if you got different credit scores, you're paying different amounts on the loan and you're paying different amounts on the insurance. Why? Because they can. The deck is stacked against you. All right. So that's the bureaus. That's the data. Now, where does this score come from?
Yeah.
So the most commonly used credit score is called FICO scoring. FICO stands for Fair Isaac and Company.
Yeah.
So FICO scores, think of it like a filter. They got all that data at the credit bureaus, and they got to figure out, like, they can't give a loan officer a pile of data and be like, figure it out for this guy. I mean, they're not even verifying it, right? Figure it out for this guy. So they apply a electronic filter to the data. It assigns everything you did or are doing a number and spits out your score. And that rating, they used to call them risk ratings, but then rich people didn't like the word risk because it sounds negative. So then they changed it where they said, oh, credit, you've got credit. They go, oh, I've got credit. You know, look at me. I've got credit. It's the same dang thing. It's a risk rating. Literally, your credit score is a mathematical, it's math. It's a mathematical calculation of how likely you are not to pay your bills. Okay?
Yeah.
The more likely you are to pay your bills, the higher the score. The less likely you are to pay your bills based on history, based on stuff you've done before, the lower your score. Well, what about if you don't have much credit? Well, you don't have much to prove that you can pay your bills, so your score is going to be lower. What if you got lots of credit over time? Well, that's going to bring it up. Okay? So not all credit scores are created equal. When you go on Credit Karma, number one, you are not seeing a FICO score. You're seeing a different brand, Nike, Reebok, Adidas. You're seeing one called a Vantage score. Vantage scores are used by significantly less than 5% of lending institutions in the United States.
Oh.
So when people go, but my score was a 700 on Credit Karma, I went to the car dealership and it was a 601. Yep. That's exactly it. You were comparing apples and oranges, fire trucks to tomatoes, right? Okay. So not all scores are created equally.
Okay.
You want to get more fun? Let's take the FICO score, the lending score.
Yeah.
There are 10 different models of it. Kind of like Apple, the iPhone 12, the 13, the 14, the 15, the 16, they keep bringing it out. We're up to FICO 10T, which the T stands for Trended Average Daily Balance. But there have been all these versions of FICO. To this day, most mortgage companies use FICO 2.0, FICO 4.0, and FICO 5.0, one of each. We're up to 10T. Yeah. They're using this clunky old iPhone. We're already up to the new hotness, right? And within every version of FICO, so figure 10 versions of FICO within 10 times 3 bureaus. So within every version of FICO, there are between 6 and 30 scorecards, or think of them like a bucket. Okay. There's one for automobiles. If you go for an auto loan, which is an installment loan, you make an equal payment every month until it's paid off. Mm-hmm. If you go for an auto loan, they're going to be most worried about, hey, how's this guy done on installment loans in the past? How's he been with his cars? So they give more weight to that. Now, if you're going for a Capital One credit card, they care less about installment payments. They want to know how you've managed credit cards. Yeah. When you go for a mortgage, they want all of it, right? Oh, and so within every version of FICO all the way up, there are different versions. And within each one's there's a consumer-facing version. So your consumer-facing FICO isn't even your lending FICO.
Wow. Okay. Man, that's interesting. But okay, now that we know all of that, right? If someone walk up to you and someone comes to CreditLife, it's like, man, they feel so hopeless. They are feeling down. Maybe they want to buy a house, want to buy a car. What usually going on behind the scene?
What's going on behind the scenes for us to get them there? Yeah. All right. Well, the first thing I do with anybody is a credit audit. And this is something you guys can do yourself free. All right. If you go to freeannualcredit.com, I believe it's freeannualcredit or freeannualcreditreport.com. I just Google free annual credit report. You're entitled to a Equifax, to an Experian, and to a TransUnion by law, minimum once a year. Now they were doing more when COVID was on, and every time they get sued, they change around the frequency, but you're allowed a free credit report. And this is the real stuff. This is the nuts and bolts. This is the data. You're not going to get your score. Why aren't you going to get your score? Because you have to pay for your score. You want the real score, you pay for the score. That stuff's not free. Name brand, business. But you're entitled to a copy of your report. And what I tell people to do here, let me reach over here. I tell people I'm old, and I'm old school. I say print it out on paper. Grab one of these bad boys. That's a highlighter. Yeah. And go through, and everything that's negative, everything that's bad, anything you don't recognize. Look, man, wait a minute. I never took this card out. Anything that's wrong, go through and highlight it. Okay? Those are what you need to question. You've got a legal right to question all of this with the credit bureaus, with Equifax, with Experian, TransUnion. You have a legal right and a responsibility to go to that. Remember, I said how much of the stuff is verified? 0. But they are required by law. The Fair Credit Reporting Act, the FCRA. They put fair in the name, by the way. They didn't just call it the Credit Reporting Act, which would be normal. They said fair. So, like, they're admitting we all know what we're dealing with here. So the Fair Credit Reporting Act, if I'm going to simplify it down and Johnny Cochran it a little bit, the Fair Credit Reporting Act allows you or us on your behalf to go to the bureaus and say, hey, guys, with all due respect, prove it or remove it. Prove it or remove it. Verify it's mine. Verify it's real. Verify that's the balance. Verify that's the account number. Verify that's the date of first delinquency, date of last activity. Prove it. Prove it. Prove it. Prove it. And if upon demand, when done right, if the bureaus can't verify, validate, and document that everything you're questioning is 100% accurate and factual and current and correct and verifiable today, not 3 years ago when they put that late payment on there. They have to be able to verify that today.
Okay.
If they can't do it, then it has to be permanently deleted by law. So when someone comes into me and they're like, dang, Jeremy, where do I start? For myself or for you guys, your listening audience, and by the way, I have a step-by-step do-it-yourself credit repair guide in my free credit repair advice group. Is free.
Okay.
Like, I tell you how to do what I do for a living. Like, we give all the free. So, it's kind of crazy. So, but it makes sense. I've got letter templates, everything for you. So you got to go to these people and say, prove it. So that's what we do. Now, obviously, we're experienced at it. I got a whole division of the company. They know the timing. They know the best approaches and stuff like that. It's kind of why it's why you hire a lawyer to represent you instead of trying to represent yourself in court. Yeah. It's the reason I hired the plumber to do the water heater, because I was going to do a water heater myself and I was going to save $300. And my wife stopped me. And said, Jeremy, so what do you know about gas lines? I said, well, I watched a video. She goes, what do you know about water? I said, video. How about electric? Video. She goes, you're going to blow yourself up, electrocute yourself, and drown. She goes, hire the guy. Stay in your lane. So sometimes people, So, but the first thing for your audience, the first thing for me, for you, get a credit report and read a credit report. Even if you're not sure what you're looking at, just start to familiarize yourself. It's your right. It can be done for free. Now, I got back to Credit Karma. I think I kind of explained why Credit Karma is not going to help with the different versions. But Credit Karma is nice. It won't give you the information you need to actually challenge anything on the data. Okay. So what do you do next? So now I've got this crazy highlighted credit report, right?
Yeah.
So the next thing you're going to do is write letters, old school snail mail paper letters, okay, to the credit bureaus. Now, you can go online and dispute online or challenge online on their websites, okay? But in the small print, the terms and conditions that nobody ever reads because we're Americans, we're instant gratification. We don't read the long stuff, In there, you're giving up a significant number of your consumer rights when you do it electronically. You're giving up the right to reinvestigation, which means you get to ask once and you don't get to ever ask again. You give up the right to written results. What would a guy do with written results that showed the bureaus were doing something wrong? They'd take him to a lawyer and sue the bureaus. You give up the right to the paper trail. So we're trying to paper trail everything, so you use paper. You write up these letters. You challenge the data. You send them to the bureaus. If you don't get what you're looking after, which is a deletion, ask about a different part of it. It's a process. I wish it was one and done. I'd love to say it's one and done. The people who promise you it is aren't telling you the truth. They're selling you bill goods.
Yeah, just for the sake of our audience, like, so if someone come to you, then, right, someone walk through your door.
Yes.
how much do you charge for your services? Someone says, man, my credit, I have a 506 credit. Maybe I'm trying to take up a mortgage. You know what I mean?
Our biggest, fancy, most expensive one, there's an onboarding cost, which covers all the first work. And then it's a monthly membership, and you only stay with it as long as you find it valuable. So the onboarding for an individual, it's $299. For a couple, it's $399. And you don't have to be married. I mean, it can be siblings, anything, friends. That doesn't have to be paid when you come to my office, though. In fact, I can't legally collect it, any of it, for at least a week, because I have to do work before we get paid. Any credit service organization that charges you before work is done is violating the law. Not only are they not doing it right, they're violating the law. So that onboarding pays for me to do a professional credit audit. It pays for an online dashboard to be created so you can track it and see what's going on and learn. It pays for something called a credit builder blueprint, which it's something that's trademarked to CreditLife. It's a 34-page custom tailored ebook. It's got your program in it, specifics, recommendations. It's got credit education, all kinds of stuff you're going to be going through. That onboarding can be split into half payments over a couple of weeks also if it lines up to payroll. Like, we're really casual about making it easy for people. And so we do our work, then you pay. Now the monthly membership, it's month to month. You only stay with it as long as you're happy. You're not locked into a flat fee. You're not locked in a contract, and we don't bill until after each month of service. So again, we have to do our work before we get paid. It's very Minnesotan of us, do the work, then you get paid. That pays for all the investigations. On top of it, you get a FICO certified coach. You get me. I'm the senior coach here. So literally, I'm making your plan. I'm doing calls with you. I'm doing follow-up with you. I'm directing you on budgeting. I'm directing you on debt settlement, debt reduction techniques, debt settlement strategies, credit building, you name it, savings strategies.
Okay.
Yeah. So it's the monthly. Go ahead.
Yeah. Go ahead. What's the monthly then?
The monthly for an individual it's individually it's $139 a month. For a couple, it's $239. But we give discounts for educators, anybody in medicine, nursing assistants, and so we don't do doctors though, because I know what they make. We do first responders, veterans, service members, also social workers, people who work with the disabled. We're really big into people who work with disabled. So yeah, we give discounts, teachers.
So what are the top 2 or 3 actions that actually improve our credit score, regardless of income?
You want the fastest stuff that you can do to improve your credit score. Number one fastest thing anybody can ever do is to pay down credit card debt. Okay. And let me explain why.
Yeah.
So your FICO score, the big one, the important one, it's made up of some sections. 35% of your FICO score is payment history. Like, did you pay it on time? Did you pay at all? Hopefully. So that makes up the biggest part. People want to know that. Hey, if I lend you money, I want to know you're going to pay back. How's your history been? So 35% is that. Now, what almost nobody realizes, a full 30% of a FICO score, of the lending score, is balance to limit ratio. So usage on credit cards. What that means is if you don't have open and active credit cards, you're already missing out on 30% of your score potential.
Okay.
The other thing it means is if your balances are too high, you're destroying 30% of your whole score.
So where's the happy medium then?
I'll tell you what. Everyone's told all kinds of stuff on how you're supposed to use credit cards. This is my favorite question, by the way. I've asked this in a group of 25,000 mortgage lenders and had them raise their hands and give the answers while I was up on stage. So how many of you raise your hands? And by the way, raise your hand every time you've heard one of these things. How many of you have heard you're supposed to keep your credit cards under half? A bunch of hands go up. So, okay. How many of you have heard you're supposed to keep your credit cards at 30%? 30%. And people hear 30% all the time. People love them some 30% for credit cards. Most of the hands go up. Some of the hands were already up for 50. Now they're up again. And then I say, okay, how many of you guys, a little more savvy, how many of you have heard 10%? Some of the same hands. Same 50, 50, 30, 10, you know. I go, how many of you have heard that you should open them but not use them? And hands go up. How many of you have heard that you can charge as much as you want and pay it off, a couple days before the due date or by the due date? I usually pick one guy and be like, dude, your hand was up for all of them. So they can't all be right.
Yeah.
And what these mortgage lenders are trying to tell you, and what these bankers and realtors and financial gurus and credit gurus and your parents and everyone's trying to tell you is, they're trying to say, what is the best area that will add the most points to your darn score?
Yeah.
Right? There is an area. I talked about buckets, right? I mentioned buckets and zones and regions. All right. There's an area in the FICO algorithm, the math formula that makes your score, that'll give you the most possible points every month. The bad news is it's tiny. It's 1% of the limit to 3% of the limit. 1 to 3. No less and no more. Any less you broke it, any more you broke it. So less than 1% activity is not considered activity, and you need activity to generate points. You need gasoline to get a motor going. You need activity to generate points.
Yeah. So if I have maybe a $1,000 credit card, like how much do I need to? I mean, what's the activity on that like every month to stay within that 1 to 3% then?
Now, this isn't how you're always going to use your card. I want y'all to keep this in mind, but you ask, what can we do to do it fast? What can we do to jack our score?
Yeah.
So $1,000 limit credit card, let's say it's a Visa card, right? That means a monthly spend, a monthly average daily balance, and a monthly payment of $10 to $30. No less, no more. So how do you do this? Let's take someone who's just building credit. Maybe you don't have $1,000 card. Maybe someone has to get a secured card and they're excited they got their first secured card and it's a $200 limit, right? Mm-hmm. And that's probably some people in the audience. Some people going, oh, that's me. Yeah. So you open up your credit card, $200 limit. So 1 to 3% is $2 to $6. No more, no less. Now, I've got Netflix with commercials because I don't mind commercials. My Netflix is $6.
Okay.
Put the Netflix on that card. Set your checking account up to automatically pay it when it's due. Money goes on, money gets paid. Money goes on, money gets paid. You're sitting back, you're watching Stranger Things, right? And you've created a credit machine in the background that's adding the most points every month. Now, do you have to do this once you've got your house? No. But this is the fastest way to increase your score and the fastest way to get you to the goals. So maybe you do this till you get your house, and after that, then you can do 10%, 20%, 30%, pay it off. As long as you don't have a financial goal tomorrow's score doesn't matter. But you want to build towards a positive outcome. So if your goal is specific, the steps to get there are specific. So fastest way to raise your score, to juice it, is balance to limit ratio, paying down a credit card. And if you don't have a credit card, get one and use 1 to 3%. That's number one.
Okay.
Second fastest way, if you've got collections that are out there, okay, you got a collection with Midland and LVNV and Portfolio, and one's an old Credit One card, one's a whatever. While paying on a collection is a step in the process, from a credit standpoint, from a credit building standpoint, it's not necessarily the first step. Here's the reality. A lot of people have heard, go for a pay for delete. Get pay for delete. Only pay them if they'll delete. Okay. Not every company will do pay for delete. In fact, most will not. The reason is it violates their contract with the credit reporting company. They have to use a company to report to Equifax, Experian, TransUnion to say, oh, Jeremy's bad. He doesn't pay his bill. He's got a collection, right? And they make a contract with that company saying we will only report factual info. So if they report, oh, you've got this collection, and then they come back 3 months later and say, delete it. Why? Well, just kidding. That it violates the contract.
Okay.
Now there are some companies who will do pay for delete. Midland, Portfolio Recovery, and LVNV are the three biggest that will. They're required to because of a settlement with attorney generals. But when you've got a collection, pay for delete aside, if you pay off an older collection that's reporting negatively on your credit report, your score will drop.
So what do you do?
Drop.
Guess what do you do?
All right. So the first thing you do, remember I said you pull the credit report, you investigate and seek deletion.
Mm-hmm.
You investigate and seek deletion. Once it's deleted, once they're not holding your credit hostage anymore, you're not only going to negotiate the settlement, but you can do it in payments. Doesn't matter. You're not given new activity. You can settle for less. Doesn't matter. You're not given new activity. You could hold off and wait and see what they do. Doesn't matter. You're not given new activity.
So wait. Clarify that though. So the first thing, if I have a collection on my credit, instead of you have all these letters coming at you, right? Oh, you can settle and we'll get rid of it, or we'll do X, Y, Z. So what you're saying then is like, go ahead forward with the investigation. After that, then before you can try to do any kind of a settlement with them. Is that what I heard you say?
What I'm saying is, while settling it is a step, it's not always the first step. Again, some of this is goal driven. Like if you're trying to close on a house next month and the underwriter says this has to be gone, and the company says we'll get rid of it if you pay it, well, pay it. You want the house.
Yeah.
But think of it this way. I owe $5,000 to Midland.
Yeah.
Okay. Midland will do a pay for delete. Midland offers to settle it for $4,000. And I'm going, man, $4,000. I save $1,000 and they'll delete it. If I get it deleted through the investigation process first,
yeah,
and then I call Midland and say, how about $2,500? And they'll go, oh no, we said $4,000. That's all. Go, hey, Midland, what'll happen if I don't pay it? Oh, we'll stay on your credit report for 7 years and you won't get, you can stop and go, guys, let me stop you there. You're already gone. You couldn't even do that right. I'm calling you to settle it as a courtesy. Suddenly the negotiation's different. You're saving money. So while settling is a step in the process, it's not necessarily the first step. In my opinion, as a coach, first step is typically that investigation seeking.
Investigation. Okay, that's great. That's good. And then the other question I have for you, what's the difference between a credit repair and credit rebuilding? Is there a difference there?
Well, yeah. Credit repair is the systematic investigation. So investigating with the letters, the bad stuff on your credit report, trying to get it deleted. Once it's deleted, you got clean. You're clean. It's gone. You've repaired it. Now, the building is the account management. It's making sure you have the right accounts. Like for a mortgage, they always want a mortgage underwriter in traditional underwriting. So the mortgage underwriter, when you go for a loan, you're not talking to the underwriter. You're talking to a loan officer. And it's their job to take your application and talk to you about prices and stuff like that. But they don't get to say yes. Even when their computer says yes, that's not the final yes. There's an underwriter involved. That's the human being with the keys to the kingdom, right? They got the money. So in traditional Fannie Mae, Freddie Mac, these are different brands of mortgage, not companies, but the actual money.
Yeah.
So Fannie Mae, Freddie Mac, FHA, VA, and USDA traditional underwriting, they want a minimum trade line or a minimum account requirement. They want to see you have some accounts to prove you can manage them. The minimum account requirement happens to be 2 revolving accounts, credit cards, open and active with good payment history, 1 installment account. It could be a mortgage, a student loan that's paid on time, a car loan, or even one of those credit builder CDs, right?
Yeah.
They want to see that open and active. They want to see a 24-month credit depth. That's time. Okay, so if you're building credit, let's say you got no credit and you're trying to build it to get a house, well, you're not going to have 24-month credit depth. So how do we get around that? Well, maybe we open a retail card also. So you're showing that underwriter that you can handle yet another kind of credit. So when the loan officer is trying to sell you to the underwriter, they're your buddy. They're your sales guy. They're going, hey, underwriter, I think you should approve this. Underwriter goes, they've only had credit for 18 months, not 24. The loan officer will go, yeah, but you see this Target card? That's a different kind. They've had that open for 12 months with perfect on-time payments. It's called a compensating factor.
Okay.
It compensates, lets the underwriter say yes.
I know talking about mortgage a lot, and that's that's very good. But the other thing maybe might not be directly related to credit rebuilding or credit repair.
Mm-hmm.
What's the debt to income ratio? Every time you want to buy a mortgage, someone says, "Oh yeah, your debt to income ratio." What's that? Can you clarify?
Debt to income ratio. That's how much you make versus how much you owe. Okay. So, I've talked a lot about mortgage because it's usually the biggest thing, but everything I've talked about also applies to cars, auto loans. Yeah. It applies to getting into a nicer apartment.
Sure.
It applies to a background check or even a credit card. But debt to income ratio, okay, so that's affordability. How much of your income goes out on consumer debt every month? And consumer debt would be rent or mortgage payment. Consumer debt would be credit cards, car loans, student loans, okay?
Mm-hmm.
So what an underwriter for mortgage, the big guy, will look at is they'll look at how much is the house loan and how much is everything else connected. They look at the two percentages. So like if 28% of your income would be going towards the mortgage or the rent, but they allow up to 36% of your income total to be for the other consumer stuff. That means they want the house to be no more than 28. They want all the other stuff, the credit cards, the Target card, no more than 36%. So these days with computerized initial underwriting, they've allowed some bigger windows. So usually you can get up to about 40% of your income. But then you also don't want to be house poor or car poor, right? You don't want to be, you don't want to have this gorgeous house and be sitting on milk crates because you can't afford furniture, right?
Exactly.
So that's debt to income ratio.
Yeah. So what are the most common mistakes then, people make, that keep their credit from improving?
The most common mistake, not addressing it. Seriously. Not addressing it, being afraid.
Just letting it sit there. You see the letter in the mail all the time, and you just ignore it. Okay.
Yeah, no one likes to look at the scary stuff because it's unpleasant. But I'll tell you, the sooner you communicate with the creditor, the better off you are.
Okay.
If you know you're going to miss a payment, don't talk to them after you missed it. Call them ahead of time. Hey, what can we do? Sometimes they'll give you a grace period. My car loan sent me a thing saying, hey, if you want to take December off, you can. And we just push everything back a month. And I went, I've got 7 kids. Yes, I'll take December off. I have a 0% interest thing too, so it didn't cost me more.
Yeah.
So communicating ahead of time, that means these programs exist. I wasn't bragging. That wasn't like a humble brag, but I'm saying this exists. And they're more willing to work with you if you tell them beforehand or while it's happening than if they have to bother you for it, because now they're assuming you're just not paying on purpose.
Yeah. How damaging are things like late payments, as you said, like collections, max out credit cards, and how damaging are those? I mean,
your first late payment. Oh, here, I'll put it like this. 1 30-day late payment. This is going to be the easy one for the audience to remember. 1 30-day late payment on your credit report takes 24 on-time payments to make up for.
Wow. One 30-day late payment.
24 on-times to make up for it.
Can that be disputed though? I mean, can you fight that?
Yes, you can. You can do it with the investigation letters. You can fight it and say, hey, what's kind of fun is you're not saying, hey, if this isn't verifiable, I want the whole account deleted, because the whole account might be good otherwise. It might be your oldest account. It might show that you've had credit for years. What you're after is called a repair. It's the holy grail in credit repair. So What you're kind of saying is, if you can't verify that this 30-day late was 30 days late, then I demand that you remove the mark, but maintain the account.
And can they do that? Will they be able to work with you on that?
Oh, yeah. Yeah, we do that all the time. Now, it's less common. We go for it first because it's the Holy Grail. You want it. We go for it first. And in that, sometimes we find other unverifiables. But every credit report's like a fingerprint, man. It's so different. I can have two people who were married to each other for 30 years and they're on the accounts together, and their scores are different. It's just crazy, right? So it's like a fingerprint. It's so different for everyone. So the solution, and that's the problem with the gurus online, man. It's not one size fits all. It's not, but this also shouldn't discourage you. If you don't have the money to hire a pro, this shouldn't discourage you from doing it yourself.
Got it.
Seek out the right tools. Seek out the right people who are willing to help.
What advice will you give someone, right? Like maybe or to folks who keeps opening like new credit lines, new credit cards, but never see any improvement in their credit. In their credit score, on their credit.
Usually, I'll tell you, slow down. Slow down. Every new inquiry costs you between 5 and 15 points off your score. An inquiry, a hard inquiry like that, stays on your credit report for 2 years. It impacts your score for 12 months. So if someone ran out to the Mall of America tomorrow, last I checked, there were 446 cards you could apply for. You could eliminate your credit score in an afternoon. It'd be a long afternoon, but you could do it. So, yeah.
Go ahead. No, go ahead. Finish up.
Okay. So, what would I say to someone who's opening the cards and not seeing the improvement? I'd say that adding the cards isn't necessarily the problem. Either it's the usage on the cards, it's doing it too quickly, or there's something else.
Okay. Like how many credit cards does the average person actually need? Do you need just because sometimes you see people with so many credit cards, right?
Yeah, the credit card stacks and the people who are flexing with the stack of credit. Man, a pile of credit cards ain't a flex. It's not a flex. It's a loaded weapon, you know. I recommend two good quality universal cards: a Visa, a MasterCard, American Express, Discover. Sometimes if you use a card a lot for travel, then I recommend one that might have a fee but has rewards. Okay. And that one, just use it for travel, and use the other ones, do that 1 to 3% I talked about. So overall, you're not maxing them all out. It's nice to have a retail card or two. I really do have 7 kids. Kohl's Cash at back to school time, Kohl's Cash is a savior, right? And you get that with the Kohl's account. You get extra Kohl's Cash. So yeah, it makes sense to have some of these things, but don't pursue a score. Don't pursue available credit. Pursue a goal.
Got it. What makes a company different, in terms of credit repair and the work that you do? What makes a company different from other financial services company out there?
Oh, sure. Well, like us versus other credit service organizations, we handle multiple methodologies, eliminating the negative and building the positive. And we have budgeting. We've got debt reduction strategies, debt settlement techniques. We have debt relief programs. We have business credit development. We have funding for business credit. We have a AI guided DIY program, an AI guided do-it-yourself that includes credit monitoring for, I think it's $30 a month, and AI makes the letters, so it's click, print, send. You've got FICO certified coaches, which, again, I know all of the FICO certified coaches in the country personally. I know them all, and no one's got a pile of them like this. On top of it, we're A+ rated with the Better Business Bureau. We've been members for 10 years. We're licensed, fully licensed. We're fully bonded because this is a licensed industry. The first thing I tell people when they're like, oh, I'm looking at this credit person, go, A, do they have an address? That's always my favorite question. Do they have an address? But are they licensed and bonded? Because we have to have a $100,000 surety bond. So are they licensed and bonded? There are some states that don't require licensing. To me, that's a bad idea. This is one area where I'm all for government enforcement and regulation. I want them looking at our industry. I want them because every time they look at our industry, it only protects consumers.
Yeah, yeah. When it comes to the whole credit and credit score and things like that, right? What's the one thing people don't realize they are paying more for because of bad credit?
Insurance is the biggest one.
Insurance?
I think, yeah, car insurance. People paying more for their car insurance than the other guy because their score is bad. That's a huge one.
Wow.
The
let me stop you there when it comes to the insurance, right? It's like
yeah.
to pay a good rate for insurance. What does your credit score needs to be to pay a good rate?
If you're above 640, you're going to pay a decent rate.
640.
Below 6, it's more like they penalize you for lower than they reward you for higher.
Well, I've seen people though, like with 640 or 700, still paying high for insurance. Is that?
Well, keep in mind, it's not always the score. Sometimes they turn the page and look at the rest of the profile. And I assure you, remember you said someone's opening the cards, using the cards, and they're still not seeing the score go up. I said, it's something else. It's something else.
Okay. One thing, right? There's a platform where we amplify, empower, and elevate immigrant voices.
Yeah.
Yeah. When most immigrants come here, especially working class, right? They don't know anything about this credit thing, right? Like,
right.
What would you say is like, how do someone just come into America for the first time? How should they approach credit?
Carefully. And seek out good, qualified advice or a good qualified coach. And it doesn't necessarily have to be someone you pay. I've got that free credit repair advice group. I encourage people to go there. You're going to get actual coaches, FICO certified coaches, who are the admins of the group. We don't allow wrong info in there. Okay. And we will tell you if you're like, hey, I just got to America yesterday. What should I do? We'll give you a roadmap. And we won't charge you for that. Why wouldn't we?
Okay. Yep. There's a question here from one of our listeners. Right? Why do some businesses cancel business with you because of your low credit?
Oh, I'll tell you what. This is a whole complicated thing with the economy right now. So right now there's something in credit cards in particular. It's called a flight to quality. It's translating into right now Americans are carrying more credit card debt than ever in history. Right now, there's more default on credit cards than at any point in time in history. And so if you're doing good with one account, but your score is going down somewhere else, they do periodic credit pulls that they're not full inquiries, right? They're not that, because you're not applying for anything. So it doesn't cost you scores. But they do a monitoring of your credit. And if they see you starting to go down elsewhere, Capital One will go, wait a minute, what does Discover know that I don't know? Right? What's going on over there? And so they'll lower limits. And the thing is, sometimes right now, it's just risk. I had my Amex limit lowered, and my score went up 2 points before it, and they lowered my score. And so I called them. I was angry. I'm like, do you know who I am? Look what that's what he said. I really did say that. And I said, look, I pay a fee for this card. And they said, it's not just you. I said, oh, is it flight to quality? She goes, oh, you know what that is? I said, yeah. She goes, yeah.
Yeah.
So it's projected risk. There are guys that are way above our pay grade sitting in offices somewhere calculating numbers. How likely are these people not to pay us? And they'll adjust limits or they'll even close it. It sucks. It's terrible because you can have a perfect payment history and a nice long track record and they won't work with you.
Wow.
Man, I hope that answers your question.
Yeah, no, you did. I mean, this has been a really, really great conversation. This is a 1 hour show, right? I want to keep we can't keep it on as a 1 hour show, but I just have 1 or 2 more questions and then we'll
Yes, sir.
How can people tell the difference between a legitimate credit help and a scam?
All right. If they guarantee results, sadly, it's a scam. if they tell you that you're going to get X amount of points increased, it's a scam because you can't do that. There's something called, by the way, look up CROA, Credit Repair Organizations Act. Do that before hiring a credit repair company. It's really informative. We have laws that govern us, federal laws. So if they make you promises like this'll guarantee that you'll be, everything will be deleted guaranteed, or things will be deleted guaranteed, or you'll go up 100 points in 30 days guaranteed. Scam. If they say it's going to happen too fast, 7 days, you'll do this in 7 days. It's scam. If they charge you in advance, scam. Those are some of the good ones.
Okay.
If they use the word hack or trick or say that they have like an inside person at the bureaus, scam.
Okay.
Yeah, big scam.
The other question I have for you is like, what questions should people ask before trusting someone with their financial future?
Oh, great question. Number one, what kind of qualifications do you have? Number one, what sorts of qualifications do you have? The next one, if it's a licensed industry, I'm a licensed industry. Do you have a license? Okay. How many years have you been in business? Are you rated with the Better Business Bureau? It's a good consumer protection bureau. My industry, for credit industries, we're required to have bonding. Are you bonded? What types of certifications do you have? Like, I'm certified by the American Institute of Banking and Consumer Lending, and I'm certified by Allregs as a FICO expert. You want to make sure that they're really qualified to do so. And can I ask a couple of clients? Do you have any clients I could talk to about their experience with you?
Yeah. Yeah. Well, a couple of, there's some questions I just want to give the listener the opportunity before we
start. Yes.
So what makes some businesses, I know you probably addressed this a little bit, what makes some businesses lower your previous credit amount?
Yep. The real things that'll make them lower it, a missed payment will. So if you miss a payment with them, or if your score drops, or if a new negative item shows up on the credit. Like, you could have a new negative item show up and your score might not drop much, but they get a notification of that.
Got it. Okay, the other question here, right? What's the reasonable amount of time can a person repair their credit?
The industry actual average is around 9 to 10 months for most people. Now, I've had people who are done in 3 months, and I've had people who've been with us a couple of years. So everything's like a fingerprint. It really is. It's different. It's like anything. Did you sprain your finger or have you broken both of your legs? One's going to be a little harder to fix. Yeah. But to really be, now that's not until you qualify for stuff. That's till you're doing really good.
Got it. If someone listening to us tonight want to start fixing their credit tomorrow, what's the first step?
The first step is to access a good 3-bureau credit report. You can do that from the freeannualcredit.com. And that's absolutely free. You want to get yourself familiar before you have a professional start telling you what needs to happen. Okay.
And then my last question for you is what's the mindset shift, right, that is important for long-term financial health? As you said, right, we are all addicted to credit in this country. You know what I mean? It's because, as I said, right, it's a consumer-driven society. So what's that mindset shift?
The mindset shift, I want you to think of it like this. It's mindful spending. Mindful spending. I'll give you an example for it. It'll be a quick one. I go to Target and I'm grabbing some groceries and a shirt, and I pick up a 12-pack of Coca-Cola. Okay, I put it in my cart. I then take my cart up to the register and I'm putting all my stuff on there, and I turn and I look and there's a cooler right there with ice cold Coca-Cola bottles in it. And I open that thing and I grab one and I put one on the belt because I'm going to have a nice cold Coke. Now, I'm buying 12 of them for $7. And I just threw one of them for $3 on that belt. If If I'm really that thirsty, I'll open the case and have one. Mindful spending. Go through your bank accounts. Go through your checking account. Look at where your money goes. How many things and just think about it. And this isn't it's not even a lecture. You don't have to live by a budget even. Just be mindful of where the money goes. Credit cards are really easy to use on that quick little Coca-Cola. Run into the gas station on your way to work. Just grab a soda, grab one of these. We got the Monster Energy drinks, right? By the way, this one was my bad one. This was my mindful spending. So now I get them shipped by Amazon to my office by the case, and I save $112 a month over what I used to spend.
Okay, real quick here. I knew you already talked about this, but for the sake of our, for
yes, Princess.
Yeah.
Okay, yeah, Princess. The best way to dispute is not online. It's through writing, written letters sent by the mail to Equifax, Experian, and TransUnion. You want to identify the account, identify yourself, identify the account, and you want to say what you want to have happen. Verify that this was 30 days later, I demand you delete it. Verify this collection is mine, or I demand you delete it. Those sorts of things. If you'd like, you can go to the free credit repair advice group on Facebook. It's the one with 65,000 people in it. I've got a do-it-yourself, absolutely free document called Pro Tip you can download. And that's for anybody out there. You are all welcome to it. I've also got dispute letter templates for free for you.
Yeah. I mean,
good.
And she's telling you, thank you for that. But yeah, the thing, as we wrap up here, right? I know, like, there are a lot of subscription these days, right? You talk about Netflix. I mean, there's so many subscription. What's your take on subscriptions?
Oh, microtransactions, my friend. Microtransactions. I was paying for 3 Netflix.
Oh.
I didn't realize it. I don't watch 3 Netflix. I watch 1 Netflix. So I had that. I was still paying for Paramount Plus, which I had gotten I did a free trial.
Yeah.
And forgot to delete. Americans are great at this. We take the free trial and then we forget to cancel it. Subscription models are happening more and more and more, and even on little tiny number subscriptions. It's because those $3, $4, $5, we forget about them.
Yeah.
Mindful spending. Review your bank accounts. Review your credit card statements. It's easy to put Netflix on the card. That's what I did. I had it on 3 different cards.
Okay. Well, man, Jeremy, it has been a great conversation. But as we wrap up here, I will give you the last word, right? Like, tell folks about your company, maybe like where they can find you,
absolutely,
your website, your phone number, or anything.
I appreciate that.
About our audience. Yeah, go ahead.
For sure. So my name's Jeremy Dysock. I'm the senior FICO certified credit coach at CreditLife. CreditLife is our company. It's like credit without the T, then life. We're out of Burnsville, Minnesota. Our website's www.creditlife.com. If you'd like to book, if you're thinking about maybe I would hire CreditLife, if you want to book a no obligation credit consultation call with me directly, just go to book, B-O-O-K. So book Coach Jeremy, Jeremy.com. You don't charge for the consultation. It's to find out about you. It's to find out if we're a fit or if I've got a right solution for you. Maybe you need referrals. I'll refer you where you need to go. Maybe you just need good advice for your journey. And join the free credit repair advice group on Facebook. It's got 65,000 people in it. We've been around doing that for 9 years, where we legitimately give free advice. It's a really neat, vibrant community full of people who are truly interested in good, compliant information and helping each other succeed.
Well, gentlemen, thank you so much for accepting our invitation to the Inner Circle podcast.
Thank you.
There has been a great information. I think our audience learned a lot tonight. I did learn a lot, so thank you so much. And hopefully we'll be in touch. Maybe when the mortgage season come around, right, when the home buying season come around, we might bring it back on, right? So
reach out anytime. I love to talk to you. It's fantastic.
Yeah, well, thank you so much, Jeremy. You have a good night.
Thank you. You too. Bye.